Everyone, good evening. Okay. Okay, yesterday we discussed about a divorce settlement relate, related to any alimony, any child support payment, and any property settlement. And other thing we discussed about IRA, how IRA are reported, and some salt state and local taxes refund, salt refund related things. So our next topic is about Schedule C. So in Schedule C, we reported our profit or loss from any business. Like if you are running any business, like any sole proprietorship, any single member LLC, even joint venture with your wife, then you have to report your income and loss from that business to the Schedule C. Any net profit or loss to be reported on Form 1040. So, who files Schedule C? Who can file Schedule C? So, if you are running any business as a sole proprietor, any single member LLC, any statutory employee, any independent contractor, or even if you are working as a freelancer and any joint venture with your wife, then you have to report these income in Schedule C. Also, so you report this income in Schedule C and also pay the self-employment taxes on these kind of income. Next, what kind of incomes are included in Schedule C? So, any income from your business, it may be it may be your sales. If you are selling something, it may be your fees if you are providing any services, or it may be some commissions. Any fair market value of bartered goods or services, any business interest you are earning, any rebate, any refund, any bad debt recoveries, prices, awards connected to business, and any state tax refund. So these are your income included as gross income. So even if you are getting any federal and state gasoline or fuel tax credit or refund, this is will be also your income. And since you are running a business, and if you are selling any property also, then it will also included in your gross income, not in your capital gain and losses, because this is a business related property. Next, what will be excluded? If you are paying any sale, if you are collecting any sales taxes on behalf of government, any loan proceeds, any owner's capital contribution, any non-business income, then it will be excluded from your Schedule C. From this gross income, you can subtract your expenses related to the business, like any salaries or wages you are paying to your employees, any advertising and promotion expenses, any car and truck expenses, any commissions and fees, any legal and professional fees, any business kind of interest. अगर आपने अपने business के लिए, if you are taking any loan and paying some interest on it, then you can subtract it as an expense. Any insurance you have purchased, then you can subtract You can show it as an expense. Any employee wages and benefit, if you are paying any benefit to your employees, if you are paying any taxes, any property taxes, license fees, any repair and maintenance, any equipment or office rent, then you can subtract it from your gross income. Now, if you are paying any travel expenses, like for business travel, then you can subtract it from your gross income, and it will give you 100% deduction on travel expenses. But for meals, you only subtract 50% of amount. Important thing is, if you are using your home in the business, or certain portion of the home in business, then the uh, proportion of that expenses you can deduct in the from your gross income. कि अगर आप कोई अपना होम, लाइक होम का कुछ पोर्शन या होम बिजनेस में यूज कर रहे हो, तो उससे रिलेटेड आप एक्सपेंसेस आप डिडक्ट कर सकते हो फ्रॉम योर ग्रॉस इनकम. अगर पोर्शन में यूज कर रहे हो, तो ओनली पोर्शन ऑफ होम दैट इज यूज इन बिजनेस, उतना ही आप सिर्फ डिडक्ट कर सकते हो. Any personal expenses you are bearing, that will be not not deductible. Any federal income tax if you are paying, then it will be not deductible. Any charitable donations if you are doing, then it will be not show in Schedule C, it will be shown in your Schedule A as an itemized deduction. So any capital expenditure you can capitalize and depreciate, but not deduct as an expense. Any fines and penalties, political contributions, honors draw or salary. So if you are a sole proprietor and you are withdrawing some money, then it will be withdrawing, not an expense for the business. Health insurance for the owner. So if you are a sole proprietor and if you have some health insurance for you, then it will be deduct for AGI on form 1040, not on schedule C. तो अगर आपने अपने लिए कोई हेल्थ इंश्योरेंस ले रखा है, तो वो आप डायरेक्टली 1040 में डिडक्ट कर सकते हो एज एन above the line deduction, but not in schedule C. So this is about your schedule C. We have to report only net income or loss on the form 1040, not all of this. This will be included in your schedule C. So if you have any profits, you should pay the self-employment taxes on your business income. And if you have loss, then you can offset against other income, but it will be subject to some limitations, like at risk basis or at passive roles. Next, again, if you are running a business, you can use cash basis method, accrual basis, hybrid basis. Self-employment taxes. So if you are a sole proprietor and you're running a business, it uh, you have to pay self-employment taxes on your net earnings. So how much is self-employment taxes? It is 15.3%. So segregating it to 12.4% is for Social Security and 2.9% is for Medicare. This include both employer as well as employee portion. So in case of sole proprietorship, you are itself an employee as well as employer, so you have to pay the whole amount. But you can deduct 50% of these self-employment taxes as an above the line deduction in your form 1040. Home office deduction means if you are using a, a regular and exclusive use area used only for the business. So if you are using a portion of your home in business, then you can deduct the portion of expenses related to business in your Schedule C. So certain methods are given to calculate the expenses, actual expense method or simplified, like relate in terms of square feet area. Next, for business, you can adopt Section 179 depreciation and bonus depreciation. Section 179 depreciation is like if you have any business use property, then you can expense the amount of that property in first year approximately equal to 1.22 million, and it will be phased out if it is above 3.05 million. Next, you can also claim for bonus depreciation. It is also applied to your business property. For 2024, it is 60%, and for 2025, it is 40%. Next, you can apply maker's depreciation for all years. Under maker's depreciation, you have certain classification, like if it is a personal property, then you use 150% or 200% depreciation. And if it is a real property, then you use the 27 and a half years and 39 uh, years and straight line method. So any doubt till here? Any doubt, Tanisha, Shravani?
No.
Uh, क्या? Okay. Next, we have loss limitation. So if you do not have like profit from your business, but instead have a loss, then all the loss you can deduct in your form 1040. The answer is no. There might be some restrictions, like at risk basis, you can deduct up to at risk amount. You can deduct up to passive activity, passive income amount, or you can deduct it to hobby loss rule said it, no deduction beyond income if activity lacks profit motive. Again, certain kind of form that is important. Schedule C, business to show business income and deductions. Schedule SE is for self-employment tax computation. Form 4562 is for depreciation and Section 179 expense. Form 8829 is for home office deduction, and 1099 NEC for report income from any client. So this was all related to your Schedule C, which include your business income and deductions. After doing all this, any net income or loss you have from your business is will be reported on your form 1040. Okay. Next is the capital gains. So capital gains you show in the Schedule D. Capital gains and losses will usually arise when you sell the any capital asset. If you are selling any capital asset, then you have some capital gain and losses. And how these are reported? So gains are taxable, no doubt. But if you have any capital loss, then you can offset it against the capital gain. But if you have like net capital loss amount, then it will you can deduct it from another type of income, but the limit should be only $3,000. Any excess capital loss you have, you can carry forward to the next year. So capital gains are basically classified into short term and long term. So if your property is held for only 1 year or less, then it will be a short term capital gain. And if it is more than 1 year, then it will be a long term capital gain. So capital gain, you can offset capital losses, you can offset against capital gain. And any net capital gain, if you have, you should report in your form 1040 in gross income. Next, virtual currencies is also treated as the capital asset for purpose of calculating capital gain and losses. Okay, so for calculating capital gain, I think I told you in yesterday class, you have to subtract your amount realized and your adjusted basis from your amount realized, and you will get your any gain or loss. So to calculate the adjusted basis, I told you ki if you have purchased the property, then it will be a cost of purchase and any capital improvement and deducting any depreciation. But if you have received the asset as a gift, then it will be the carryover basis from the donor. Uh, but exception applies ki when your fair market value is less than your adjusted basis. Means your adjusted basis, if more than fair market value, then the basis will not be carryover basis. It will depend upon the selling price you sold in the future. So again, I am repeating, adjusted basis for the property you received as a gift, it will be carryover basis generally. But if the fair market value is less than your adjusted basis, then in that case, adjusted basis will depend upon the selling price. So if your selling price, if the asset is sold later for amount less than fair market value, so if your selling price is less than fair market value and also less than adjusted basis, then the donnie will use the fair market value as the adjusted basis to calculate the capital gain and losses. Or if the selling price is more than your adjusted basis, then you will use the adjusted basis. You will use the carryover basis to calculate the gain and losses. And if you have your selling price less than your adjusted basis but more than the fair market value, then there will be no gain and losses in that case. So are you understanding this point?
Ma'am, can you explain once again?
Okay. It's just okay. I am explaining here. So if your fair market value is more than your adjusted basis, then there is no problem. You will use the adjusted basis, like which is carryover basis, to calculate capital gain or loss. But in case if your fair market value is less than your adjusted basis, then in that case your adjusted basis for calculation of capital gain or gain and losses, it will depend upon your sale price. कि जब कभी आप उस असेट को बेचोगे, उस प्रॉपर्टी को बेचोगे, तो उस केस में जो सेलिंग प्राइस होगा उस पे डिपेंड करेगा योर एडजस्टेड बेसिस. सो इफ योर सेलिंग प्राइस is more than your fair market value and is more than your adjusted basis. If your selling price is more than your adjusted basis and adjusted basis is also more than your fair market value, in that case you will use this adjusted basis to calculate the capital gain and losses. Just a hint for you, you have to arrange all this in ascending or descending order. Whatever comes in between, that will be used to calculate the gain and loss amount. You will arrange all these in ascending or descending order, and whatever comes in between, that will be your uh, basis to calculate the gain and loss amount. So again, if your selling price if your selling price was less than your adjusted basis, is less than from your adjusted basis. Sorry. Yes, your selling price was less than your adjusted basis, but is more than your fair market value. Fair market value. Then in this case, you will use your selling price to calculate the gain and loss, and it will comes like 0, because selling price minus selling price will gives you a 0 number. Okay. Next, if last case, if your adjusted basis greater than fair market value and fair market value is also greater than your selling price, then in that case you will use the fair market value to calculate the gain and loss amount. क्लियर क्लियर हुआ ये आपको? Is it clear to you?
Yes, ma'am.
Okay. And Tanisha?
Yes, ma'am.
Okay. Okay. It is not mentioned in this, but I tell you, uh, these capital gain and losses are short term or maybe long term. For short term capital gains, they are taxed at ordinary tax rate, but for long term capital gains, they have some preferential tax rate, like which is less than the long term, which is less than the ordinary rates. Next thing you need to know here, like if capital gain is more than your capital loss, then no worries, you will offset these losses against your capital gain and report the net gain in your gross income. But if you have net capital losses, means losses more than your gains, then in that case, For individual, you can only deduct up to $3,000 from your other type of income. Clear? And okay. So if you have your capital gain more than your capital losses, then you have your net gain, which is reported in your 1040. And depending upon short term or long term, it will be taxed at ordinary or preferential tax rate. But if you have your capital losses more than your capital gain, then in that case you have net loss. And for individual, you can only subtract only $3,000 in your form 1040 from other sources of income. Clear? One more thing you need to know here. If you have like both kind of capital gain and losses, like you have term short term as well as long term. So if you have any short term gain, then you will offset it against the short term losses. So if you have any short term gain and any short term losses, so try to offset against each other. And same, if you have long term gain as well as long term losses, then offset against each other. And after subtracting these and these from itself, then if you have this short term gain or loss or short term long term gain and loss, so after subtracting it is understood now you will get any net gain or net loss in both cases, short term or long term. So after subtracting from short to short term and long to long term, if you are left with these two, net short term and net long term, and if these have opposite sign, means one is gain and other is loss, then you can offset it against each other also, like short term with the long term or long term with the short term. If they have opposite sign, means one is gain and other is loss. But if they have same sign, means both are losses or both are gains, then no need to net against each other or add against each other. So if both are net gains and net gain, short term as well as long term, then show separately in your form 1040. But if both have opposite sign, then you can offset against each other. Okay. So ये चीज समझ में आई आप सबको? Cleared this topic, capital gains?
Yes.
Okay. Shravani, if you have any doubt, you can ask.
No, ma'am, understood the capital gain part.
Okay. Next is reporting of item from flow through entities. So if you have some investment in S corporation or partnership, then income from these kind of entities you report in your schedule E. So you as a shareholder or as a partner in S corp or a partnership, you will report any kind of income or loss in your form 1040, and any special items like separately stated items that have a special treatment. If your ownership changes, then you should recognize your income according to the per share per day of ownership allocation. Suppose if you are holding 100 share of a company for 1 year, and in another year, like in July, you gain 50 shares more, then in that case your income will be recognized on the basis of per share per day basis, like how much income is related to one share for 1 day. So according to the number of days and share, you will calculate your income. Next, if you have any pass through losses, then again, can all the losses you can subtract in your 1040? The answer is no. They will subject to certain kind of limitations. First is at tax basis limitation, then at risk basis limitation, and then any passive income limitations and all. If you are getting some cash or property distribution, then you must recognize distribution as the amount of cash or fair market value of any property distributed. So if you are getting any cash in distribution or any fair market value of the property. So taxability of distribution is determined by its source, like from which source if you are getting. So if you are getting any distribution from AAA account, means accumulated adjustment account, then it will be a tax exempt income. It will be non taxable for you. So if you are getting any distribution from AAA account, it will be non taxable. If you are getting any distribution from AEP account, means accumulated earning and profit account, then it will be taxable as dividend. And again, if you are getting any distribution from OAA account, OAA account, it will be like again non taxable for you and reduce your stock basis. Then if you are getting any property, then the transfer is treated as property has been shared to the shareholder at fair market value. So first of all, जो भी आपकी excess of fair market value होगी above the basis of that property, then it will be a gain for corporate level. This gain will be added to your AAA or OAA account. But then again, depending upon the distribution is coming from AAA or AEP account, it will be taxable to the shareholder according to that. If you are getting any distribution from AAA, it will be non-taxable. If it is from AEP, it will be taxable, and if it is from OAA, it again non-taxable. These reduce your stock basis, and if you are getting any distribution excess of stock basis, then it will be a capital gain for you. Okay. Adjustment and deductions to arrive at adjusted gross income. So this was all about your gross income. Apart from this, you also have certain kind of other income like prizes and awards, any kind of scholarship, any kind of gambling winnings, social security benefit. So these are directly reported in your form 1040. Next will be your adjustment to arrive at adjusted gross income. These adjustment and deductions are called above the line deductions. They are deducted from your gross income to calculate the adjusted gross income AGI. So what kind of adjustment you have? Okay. So first of all is adjusted gross income. You calculate by deducting certain kind of deductions. First is deductible from gross income are the following: expenses of producing business income. This includes some such items as advertising, insurance, rent, 50% of business meals. So these are basically deducted from your business income. Like these are some business expenses which you deduct in your Schedule C. From your gross income in 1040, you can deduct any capital loss, but up to $3,000. Any expenses of producing rent and royalty, any expenses of producing farm income. So basically, main thing you need to learn here, first of all, is net capital loss, that is up to $3,000. Next will be your contribution to health saving account. If you are contributing any amount to your health saving account, then you can deduct it in your from your gross income. If you are paying self-employment taxes, then half of the taxes you can get as deduction in your form 1040. If you are contributing to any retirement plan, as I told you yesterday, if you are contributing to any retirement plan, especially the traditional IRA, then you can get the deduction. For Roth IRA, you do not get any deduction. If you are a self-employed and paying any health insurance premium, then you can deduct it from your gross income. If you have a penalty, like you are withdrawing your savings early, like then you have a 10% penalty, then this penalty you can deduct in your form 1040 from your gross income. Any qualified student loan, if you are paying any student loan, then interest on that loan you can deduct up to $2,500, but certain phase out applies here. And also here you can also deduct if you are a educator and have some educator related expenses that is unreimbursed, then you can deduct these expenses up to $300. This is here. Up to $300 you can deduct from your gross income. So these are certain above the line deductions. So any doubt in above the line deductions? Any doubt?
Can you explain the sixth point?
Okay. Certain unreimbursed business expenses for reservist performing artist. So अगर आपका कोई related एक कोई business है related to some artist work or any reservist, तो उस केस में आपके unreimbursed expenses आप 1040 में claim कर सकते हो. आपकी इम्पोर्टेंट थिंग, मतलब बहुत ज्यादा एक्सेस दे रखा है बुक में तो, बट इम्पोर्टेंट इज फर्स्ट इज कैपिटल लॉस डिडक्शन, सेकेंड इज सेल्फ एम्प्लॉयमेंट टैक्स, contribution to health saving account, educator expenses, 100 self-employment, self-health insurance premium, penalty on early withdrawal, and qualified student loan interest. कुछ पॉइंट्स इंपॉर्टेंट हैं, these are not very important. Okay, so this was all about above the line deductions. Next, after subtracting these deductions, we will get our AGI, adjusted gross income. Then from AGI you can get any itemized deduction or any standard deduction. So you know standard deduction are based on your filing status. But itemized deductions consist of certain items which have a special treatment. So first of all is medical and dental care expenses. So during the year, if you have any medical or dental care expenses related things, any medical expenses and that is unreimbursed, so you can get the as you can claim it as an itemized deduction in your form 1040. But question is, you can claim all the expenses? Answer is no. There is limit which is excess of 7.5% of AGI. So all the expenses which are in excess of this limit means 7.5% of AGI, and excess of these AGI you can claim as medical expenses. In medical expenses, there are also expenses which are included and certain are non-included. So if you have any medical expenses related to prescribed drugs, any medicines, any medical services, hospital, doctor fees, dentist fees, any stop smoking programs, any weight loss program, any medical good and devices like false teeth, eyeglasses, hearing aids, any travel expenses also. If you're traveling to the hospital, then you can deduct it in your medical and dental care. But if the expenses is related to your cosmetics, like you are spending on some plastic surgery or to uh, to just improve your appearance, then it will be not deductible. Next itemized deduction is state and local taxes and state and local general sales tax. So state and local income tax or state and local sales tax, you can only claim one deduction, and the limit is $10,000. So up to $10,000 you can deduct these taxes in your itemized deduction. Next is mortgage interest expense. So if you have any mortgage that is not exceeding $750,000, then you can get the deduction for any kind of interest you are paying on that mortgage. Enhanced mortgage reporting requirement for a lender will apply to return required to be furnished after December 31. An interest recipient must file a separate return for each qualified mortgage for which it receives $600 or more in interest for a calendar year. Next itemized deduction is for charitable contribution. So if you are contributing to any qualified charitable organization, then you can get the certain kind of deduction in as the itemized deduction. So limit is, it will depend कि अगर आप cash contribute कर रहे हो, if or you are contributing any short term property or any long term property. So if you are contributing cash to the charity, then you can get the deduction approximately equal to the 60% of your AGI. And if you are contributing any ordinary income property, means property that is usually held for short term period, then the limit will be 50% of your AGI after subtracting your cash contribution. And if the property will be a long term, then it will be 50% of your AGI after subtracting any cash or ordinary income property, or 30% of your AGI, whichever is the higher amount. I think this will come in detail in next slides. Yes. Next is investment interest expenses. So if you have an investment expenses, then you can deduct, but limit will be you can deduct up to the investment interest income only. Hobby losses, again, this is not important. So you can also claim certain miscellaneous expenses like unreimbursed employee business expenses, union dues, fees for tax preparation, dues to professional societies, any gambling losses. But for gambling losses, limit is up to gambling income. You can also get these deductions. Next, these were all itemized deduction. Instead of itemized, you can get the standard deduction if you want. It will be depend on your filing status. Like for unmarried, it is $15,000. For married filing jointly, it is $30,000. It will be depend on your filing status. After subtracting standard or itemized deduction, you will get your taxable income, and the tax table you will refer to get the suitable amount of tax rate that it will be according to your income tax bracket, and then you can calculate your taxes. Okay. Any doubt till here?
No, ma'am.
वैसे आपने ये सब पढ़ा हुआ है पहले, क्योंकि ये रिवीजन लेक्चर है ना.
Yes, ma'am.
ओके. Okay, so KD taxes, it will also come in your TCP in more detail. So basically, if uh, there is a what the taxpayer do earlier, they used uh, because kids were taxed at lower tax rate, or they get certain kind of exemption also. So parents try to transfer their income to the child to avoid the taxes. So kiddie tax comes into play to avoid this kind of tax eradication. So if you have any minor child and who have a unearned income, then it will be taxed at the parent's marginal tax rate. The limit was, if the child has an income up to $1,350, then they can get the exemption, like there is no tax up to this amount. But if they have more than this amount, then they have the kiddie. They have some taxes they should pay on this amount. And if it is more than $2,700, then the tax rate will be their parents' tax rate, marginal tax rate. So if they have income up to $1,350, then they get the exemption, like there is no tax on this amount. Above $1,350 and up to $2,700, they have their own tax rate, like child tax rate, which was earlier 10%, I think. And above $2,700, their income will be taxed at the parent's marginal tax rate. Next is charitable contribution. Again, charitable contribution limit was 60% if you are contributing any cash property, any cash related contribution. But it will be reduced to 50% if you have short term property, and it will be limited to 30% if you have long term property. And for charitable contribution, if you want the deduction, then the organization should be a qualified charitable organization under section 501c of IRC. Means only organization related to fund foundation, like which are basically organized or operated for any charitable, religious, educational, scientific, or literary purpose are qualified under this section. Again, this was limit given. Any excess of deduction, any excess of contribution, you can carry forward to the next year. Okay. Next is annual deduction. So if you have any net operating losses, you can deduct, but there is certain kind of limitations. For example, if you had net operating losses from your up to year 2017, then what was you can deduct 100% of these losses, and you can carry back up to 2 years and carry forward for 20 years. But if you have net operating losses in year 2018 to 2020, then you can carry back to 5 year and carry forward indefinitely, and can deduct from the income like 100%. There was no limitation. But from 2021 and beyond, there is rule that you can't carry back your losses to the previous year income, but you can carry forward indefinitely and deduct these losses only up to 80% of your taxable income. Apart from these, losses will also subject to certain kind of limitation like at risk limitations. This concept I already explained you. If you have long-term capital gain or long-term capital loss, try to offset against each other. Long to long term, short to short term. Then you will get some net uh, loss or gain related to your short term and long term. So if they have opposite sign, means one is gain or other is loss, then you will net against each other also. And for individual, you can subtract only $3,000 from your ordinary income. This was already discussed in yesterday class about any calculation of gain and losses. And disallowed losses. So if you have any asset that is in personal use, the losses on these asset will be not allowed. Wash sale. So if you are selling any shares and purchasing within 30 days same shares or similar shares, then it will be a wash sale. Means sale and purchase transaction within 30 days of same stock. So if there is a loss, you can't deduct these losses, but if it is a gain, you can pay tax on these gains. So what happened to debt loss? So if you have certain loss, and because debt loss is not deductible, so what you can do, these losses can be deferred to the future year. Means they will add to the stock basis of the new shares you are purchasing. Filing status, again we already discussed this filing status. Next is computation of tax and credit. So this is all given how you calculate your taxes. So first of all, you have total income, then exclusion, like income which are basically not included in form 1040, then you have gross income. You will deduct the above the line deduction, then get adjusted gross income. Then you can deduct itemized deduction or standard deduction, whatever you want, QBID deduction, and then you can get the taxable income. On taxable income, you will calculate your taxes, and then from this tax liability, you can have some credits which can give you the uh, reduction in your tax liability. Then you have final tax due. Okay. So, any doubt?
No.
Okay, then we will continue from here tomorrow.
Okay, ma'am.
Okay, then bye.
Bye. Thank you very much.
Thank you.
Thank you, ma'am. Bye.
Bye.